What's going on, everybody? Right now I'm on tradingview.com. So all you gotta do is go to tradingview.com and then you could pull up any chart you want, so you don't have to download anything on your computer. This is a great charting tool to use. So right now what I'm going to dive into is supply and demand zones. So what you're going to want to do is go on a bigger time frame, go on a daily chart, so you could really identify the overview of the market. So right now we're gonna go to the rectangle tool. It's on the side, and you want to find these big spikes to the highs and the lows, and where you're gonna draw your boxes are at these pins. So my first one's gonna be up here, right? You just put it through the whole chart, and you want the box to be from the pin to the candle pretty much. So wherever the candle closed, and then at the highest point of the pin or the lowest point of the pin. So that's my first box. This is your supply area. So this is where price is coming from. This is where the supply is at, and your demand would be down here. So you see this big candlestick formed a low before it spiked up. This is your demand zone. So this is where price was accepted, and this is where buyers started taking over. So that's your demand. Just draw it like that. So now what we're looking at is pretty much a big range, right? So this market is just trading inside of these two zones. So there's more zones in between these two. I'm going to identify them. So easy way to identify them is to find where the reversals happen, where the market was reversed and where these pins were formed. So these two pins right here show me that this is where buyers took over, and this is where sellers were getting very weak. So this is where you would place your demand box. Place your demand box right here, and you just want to get them all the same length. Doesn't matter how wide they are. So there you have another one, and you could see that the price, these are your support levels now. So these are your support, this is your resistance, and I'm just going to draw them for you guys so you get a quick understanding of how you need to be drawing them. So you see how price, comes into this box and just, falls. That shows me that this is a strong resistance and strong supply area. So this is where the market, most of their orders are happening, and they're getting filled, and then boom, they're making moves. So a good way to trade when it's in this box is put a sell stop at the bottom of it and a buy stop at the top of it. So in this case, when the price jumped through the zone, you would have made money and you would have got out. And then the same thing, when it came back in, you would have put a sell stop and a buy stop, and boom, you would have made some cash. So these zones are pretty accurate, and they'll help you identify the trends in the market, and it's pretty self-explanatory. As you can see, this box, your supply zone acts as a resistance level. So this is like your ceiling. So you see price just keeps chopping, tries to break through the box, but it's getting weaker, and you would know that because this is a key resistance level. So look at this big candle, boom, gets rejected by the supply zone, and now we're in a nice downtrend, and we're heading towards 1.00 all the way down here, which is our this is our support from January/December. So price has already taken out a few levels. Let me show you. So this would be another one right here. So these zones are just getting washed away. with the Euro USD. Oh, that's why it's not working. So once you start to use these zones and practice with them, you'll get the hang of it, and you just need to, just draw them and see how it looks. See how it looks. If it looks off, then delete it and find where the pins are at. Find these big spikes, and that's where you could start out. So, like I said before, we're headed towards, this is a very bearish pair, so I wouldn't be buying it at the moment. So now you have um, a little overview on, what levels the market will be traded at. And once you add Fibonacci into the mix, so you go right down here where it says Pitchfork, scroll down and it'll say trend-based Fibonacci extension. So let's draw our Fibonacci from the high to the low to the recent high. And as you can see, these numbers match up pretty nice. So right now we're trading at the 50%, which is a good time to put your buy stop and sell stops. Our first zone up here matches up with the 0% pretty accurately. And then the next one, 23.6%, is, right at our next zone. So you can see how accurate these are, and putting the two together is a great strategy for swing trading. So yeah, really all you need to do is just practice drawing these zones. You could even do it on your phone. I could recommend you just start at tradingview.com or Thinkorswim, whatever one you're cool with is fine. You just need this rectangle tool, and that's pretty much it. That's how I identify my supply and demand zones. So if you have any questions, just ask them in the group page, and yeah, I'll see you guys on the next one.